Good day, welcome to Parliament Accounting. My name is Destiny, and today's video will be looking at instruments part 3. The financial instrument we will look at today is the equity instrument. In previous videos, we've looked at numerous amounts of financial instruments like the financial asset instrument and the financial liability instrument. Now, you may ask yourself, what is a financial equity instrument and what makes it different from the financial asset and from the financial liability? Well, here's the definition of a financial equity instrument. This is any contract that has evidence a residual value in the assets of an entity after deducting all of its liabilities. Equity instruments are measured at cost or fair value. This means that the market may determine the amount that your equity instruments are worth, or the cost of creating these equity instruments will be what is considered as their value. Equity instruments may be settled in cash or through any other asset exchange, meaning you may provide them with one of your assets, whether it be machinery or vehicles, in order to settle equity instruments. We see this mainly during liquidation of certain companies. An equity instrument represents the current ownership interests in the entity. Now we move on to the types of equity instruments. Type number 1 is a perpetual equity instrument is issued by an entity embodying no payment obligation and entitles the holder to a portion of the entity's net assets in liquidation. While a direct equity ownership instruments may or may not be perpetual and is issued by the entity. Now here are some examples of ordinary shares. Ordinary shares are basically the owners of the company. You have a right to attend annual general meetings. You are allowed to vote on appointments of directors and external auditors, and you are entitled to dividends. While non-cumulative irredeemable preference shares possess similar characteristics to ordinary shares, but you don't have the ability to vote in general meetings or to appoint any external auditor or directors. I hope this video has been informative. Please give us a like, subscribe, and leave us a comment.